This is the second video of the day and probably my last video or my last video in a long time. And this is a putting it all together, everything in one video. This is going to be one of the best videos you watched on MMXM, I promise you. So I'm going to try to make this as simple as possible. I have plenty of examples going through basically everything I haven't forgot. So let's start off, right? What is the checklist? This is as simple as I can put it. Right? We need the higher time frame. Okay, hold on. Higher time frame. What the hell? I don't know what the fuck is happening there, boys. Hold on. Already off to a terrible start. I'm just kidding. All right, so we need the higher time frame previous candle to hit a key level. Okay, and now we're going to confirm that distribution, right? So that first candle that hits the key level, which is just a fair value gap or a swing low or an order block. It has to be a high probability order block. But that is viewed as manipulation. So the next days is why we are going to trade the next days, because that's distribution, right? Manipulation into distribution, right? We're going to confirm that with the profile, with the CSD and SMT. And then we're going to look to frame our intraday market maker model off an hourly or above PD array, right? So let's go ahead and look at the models that we're going to be using. So this is fractal, okay? So it's just simply internal to external. This one is framing a reversal off of a swing low, right? And it's even better if it's in a fair value gap. It can also be framed like this, right? SMT. This is still swing low, right? It can be framed like that, or off the purge of a swing low, or external to internal. Preferably, the higher time frame is aligned, right? We're only going to frame an external range to internal range if it's on the higher time frame. We're not going to do this on the 1 hour time frame when our higher time frame is bullish. We're not going to do that. That's low probability. All right. So now let's go into a little bit of time frame alignment. So this would be a higher time frame depiction. Okay. Let's pretend this is the daily chart. Right. We run external. Right. So this would be external back to internal. Now, what are we going to do? Right. We're going to trade the day after a key level gets hit. So a key level, as in the swing low, right? Price usually doesn't reverse off the first day it hits a key level. So this is when, if you watched my last video, we're going to frame a reversal off of the swing point, because this is an expansion candle, not a reversal candle. So this becomes the reversal candle. And if there's SMT on the higher time frame, that's what we want. And we're going to trade both of these days basically, right? And if there's SMT, like I said, if the daily profile supports this reversal day, we can actually catch that day. And this is what the hourly chart would look like, right? You can have the original consolidation at the internal range low, right? And then this is the sell side of the curve, the buy side of the curve. So once we start disrespecting sell side PD arrays, drag those out as mitigation blocks. And like I said, internal range to external range, anytime we purge a low, right, this is an opportunity to get in and frame a reversal from the low to the high, from the range low to the range high. And yeah, very simple, right? Now let's talk about 4-hour candles. So this is our kind of like our intraday next day model. We really want to look at the 4-hour charts. All right, so let's say we're bearish, right? This is when if we're going to trade the New York session, like me, I trade the New York session, pretend this is NQ. If the 6 a.m. manipulated, what do we expect the 10 a.m. candle to do is distribute, right? And if we drag this over, right, if we haven't manipulated, we haven't hit a key level by 2 a.m. or 6 a.m., well, this is where we expect 10 a.m. to make that reversal, right? Let's say this is Asia session lows, this is London session lows, and we hit the key level at 10 a.m. Well, what would this be? A New York reversal. All right, so now we're going to talk about time openings. If 8:30 hits the key level, it manipulates. What will 9:30 and 10 a.m. do? Distribute. If 8:30 doesn't hit the key level, 9:30 manipulates. What do we expect 10 a.m. to do? Distribute, right? So now let's go and see what that really looks like, right? So with the daily profile, we have Asia highs, London and Asia both retracing. We hit a key level, and again, we're going to be bullish biased. And we have SMT with that swing low, right? This is your activation of a buy program, right? We're order pairing these sell stops and distributing them to the buy stops, right? And this is kind of how we enter, okay? This is the stage of a market maker model, right? So you have the sell side of the curve. Once you start disrespecting PD rays on the sell side of the curve, this being a fair value gap that got respected, right? Drag that on time. It's going to start to align with PD rays that are printed, right? So the first break is your smart money reversal, and the first retracement into that key level that is printed is your low risk buy. Now notice what time we run this low, 8:30. So what will 9:30 and 10 a.m. do? It'll expand, right? So whatever PD array that gets printed from the low risk buy is now your first stage distribution. When price comes back into this area, it's going to have this first distribution phase, okay? And now the first stage distribution, range low to high, on the retracement, this is going to be your second stage distribution in your silver bullet. So again, if this is going to be in premium of the range, so you see this line right here, this is depicting the low end of the range. This is where you ideally want to get involved. This is the premium end of the range, right? You're going to have your, you're going to have a key level around the 50% usually of that range. Once we disrespect that key level around that area, want to drag that out in time. And this is really where you want to see the second stage as well as the silver bullet. So what is the silver bullet and the second stage? So like I said, you can just enter off a fair value gap from high to low like this for second stage. But what the silver bullet is, it's a short-term low that gets ran, creating intermediate-term low. And so now this is a high resistance low. And again, we want to look for SMT all up in here on the buy side of the curve to confirm what is it called, protected lows. And once you have an intermediate term low, this becomes your silver bullet, as well as this trade here too. Right, because now you have a short-term low on both sides, but you don't have to wait for the short-term low. You can just enter on that. And yeah, these are your silver bullet trades. And as well, you can project this out for targets, right? And I just really use this for targets. I don't go too deep into it. But yeah, you can expect a retracement in the -2 to -5 or a full-on reversal. All right, so I'm just keeping it extremely simple for you guys. Maybe like in the future I can make another video, but like I said, I'm gonna be taking a break. But yeah, this is how it looks. I mean, right, very simple, right? So now let's get into some examples. Hopefully I explained that well. So let's talk about the models here. First, let's talk about the session profiles. Now let's go over here actually. All right, so remember, this is the next day model, right? This is our higher time frame framework, right? Working off of highs and lows and fair value gaps, okay? And let's go over this one, right? This first candle would hit a key level. This next candle would confirm the reversal, right? Can't displace underneath this low. And all candles that distribute higher, right, are now you're going to be your lower time frame market maker models, right? Every single retracement, right, it's going to be your high time frame. What am I trying to say here? It's going to be your intermediate time frame market maker models. And we want to see price close above previous highs, so it's going to look like this, right? And again, right? Open low, we want to see an open low respecting the top end of this candle. And you want to see PD arrays that are inside of this candle be respected, right? Or PD arrays that get printed same day, right? We want to see our models, okay, inside of those. And yeah, this is basically what you want to see. Let's go to the next thing. Okay, so this is that. Um, this is that. Um, sorry, I'm losing my train of thought here. That model, that little rule that I went over in a video. I have a whole video on this, so really watch that. But all we're looking for is a key level to get hit with the first candle. So it's going to look two ways. It's going to be an engulfing candle or a reversal candle. So if it's an engulfing candle, right, usually price is going to reverse off this previous day's low. And this is where we can confirm, or we can actually trade the reversal if we have a shallow run. Only if we have a shallow run. If we don't have a shallow run and the daily profile doesn't support it, we're not going to trade this. We're going to wait for the candle to close. And if it closes like this, a reversal candle, now we can trade the third day. And we want to see displacement on the third day. The key is we always want to see displacements after the reversal candle is put in. So this in this depiction, right, the first candle is going to form the reversal candle. And this is when we want to see the third candle, or the second candle, what do you want to call it? This candle, basically after the reversal candle is put in, we want to see that displace higher. But any failure to do so, any failure to displace, that's not a reversal we want to be in, right? And you can actually fade your bias, but again, I go over that in my video on this specific rule here. All right, so this is kind of just a example, right? See how this first candle hits this key level, right? This is a reversal candle, so we expect candle 2 and candle 3 to distribute lower. I also forgot to mention, inside of these candles, right, we want to see, SMT, CSDs, right? Or if there is none, we want to see this candle print that, right? And the daily profile support that idea. And so this candle here, right, see how it's a engulfing candle, right? Sometimes you're going to see that we actually do reverse off of these candles, right? We don't actually always have to sweep the low, but if you do sweep the low, don't be scared, right? This is actually where you confirm reversal. And yeah, if the daily profile supports it, you can actually trade this day instead of waiting for the day to close. You're going to see many examples of this on all time frames, by the way. And then candle 3 must displace. So whenever the reversal candle is put in, like I said, we want to see displacement, right? And as you see, this is a real chart, by the way. As you see, we close over the 50% of this range as well as the fair value gap. So you want to close below the 50% of the range. Any sell side of the curve, PD arrays, right? When it's displaced through highs and lows, reject highs and lows, down close candle supporting price when they're bullish. I kind of forgot to add that order flow in this video, but fuck. There's plenty of videos on that. You can just watch that. I also don't go over weekly profiles in this video. You can watch AM Trades for that. He can do it way better than me. And I just follow his protocol anyway. So yeah. So let's go over the daily profiles that we're going to confirm our models with, our intraday models. So if we're bearish, again, and we see this, what do we expect? All we're doing is seeing what the previous two sessions did, or the previous session did, and now we have an idea. We have an anticipation. So when that anticipation gets met, well, then now we can obviously get on side with that when it's in line with our higher time frame. So when this does this, right, consolidation, we expect New York to take it out. And this is where we look for SMT, maybe this is going to be like an hourly swing point. So this is where we frame our reversal off of, like I said, an hourly or above swing point. All right, and when your lower time frames start to displace lower, this is when you can trade that. Right? If Asia consolidates and London takes the high, so if you're a London trader and there's SMT, or this is happening instead of a key level, aka there's going to be a 1 hour swing point, an Asia swing point. We take that out, or we take out a swing point to the left, or we hit a fair value gap to the left, whatever. This is when you expect London to be the high day and you trade that lower. Now, if you're a New York trader and you see this, this is where you expect New York to continue lower. And if this goes for any session. If the previous session expanded, you really want to wait, and you're going to see this a lot if you go study. You're going to see that session consolidate usually or retrace. So you're going to wait for the tracement. We don't really want to trade the consolidation. Um, I forgot to add this profile, I think. So just remember this one I'm going to tell you right now. If Asia expands and London consolidates, we want to trade New York A and B. So when it takes out London highs, you want to sell that, right? Because that's going to be an hourly swing point. So it's going to be A and B, accumulation, manipulation, distribution. I don't think I added that profile in here, but yeah. So this one, if Asia and London, this is one of my favorite ones. If Asia and London just retrace, and then New York hits the key level, then this is a New York reversal. We target the session lows. And this one is the delayed New York protraction. It's when Asia and London do not make an opposing run. New York will create the fake move, not the make move. So what this is, right, if we're expecting a bullish day, what do we expect? Open low, high close? But you're going to see the previous two sessions don't make the low. So that's when New York will make the low and actually reverse off of these lows, this session lows, okay? So that's really it. So now let's get into the examples. Well, no. And I have a lot of examples, so my goodness, it's going to take a long time probably. I might be talking fast here, so. Okay, so we're on a weekly chart here. This is about 2 weeks in a row that we're going to go over. So we take out buy side liquidity, so check, right? We're framing a reversal on the weekly with the high being engaged. So if this previous week hit this key level with SMT, what do we want this candle to do, right? It's a reversal candle, so we want this candle to distribute back into the range, basically external back to internal. And once we get to internal, right, we want to see how price is reacting. If we're starting to displace to the range, right, where are we going to target? The range low, right? So let's go here. So this is Monday trading. So notice how we hit this key level, right? So if we're going to be bullish, right, we want to trade this day higher. But knowing the weekly, right, we already know that we want to be bearish, okay? But notice how we can fade this to our advantage. So if we're going to be bullish, this should be going higher, right? But what do? Shallow run above the previous high and displacing back in the range. This is now an invalidation of this fair value gap, right? And this bullish candle, right? We're displacing through the PD rays inside of this candle, right? So here, 6 a.m., this is the 4-hour chart. And notice how we have no open, high, low, close. So this is the 2 a.m. candle, or the Asia session candle. This is the 2 a.m. candle. This is the 6 a.m. candle, right? So it creates the SMT. So if this candle creates the SMT, it's the same rule as the 2 candle rule. So this is candle 1, right? It creates a reversal. So what do we want this second candle to do? To distribute, right? If we can't displace over this high, so the other asset takes out this high, then what do we target? The range low. Just like in this example, we can't displace under the low. The first candle is here. What do you want the second candle to do? To distribute higher, right? If we're going to continue bearish, this candle will be bearish, right? We shouldn't be displacing back in the range, but this is why we want to always ask yourself, what is price not doing? If it's not displacing lower, well, where's it going to go? To the range high, right? All right, so now we're going to confirm it with the daily profile. So what do we see, right? Classic buy or sell day, right? We have session lows to target. So, right, we have the SMT, we have the CSD, and the high resistance liquidity run, right? Session lows, no opposing run or key level hit. That is very telling, right? This candle right here creates this SMT. So just like on the any time frame, right? SMT, what I want the next candle to do, distribute lower, right? So the first candle distributes lower. So what will the second candle do? Open high into the key level, right? Low close, right? And the 10 a.m. candle opens here and just straight distributes. So what did the 6 a.m. candle do? Manipulate What will the 10 a.m. candle do? Distribute. All right, moving on to the next day. Right, look how we close. Right, so open high, Tuesday high of the week. Right, now what are we targeting? Right, the 50% of the range, as well as the constant encroachment, this fair value gap. So my eyes are already off of this fair value gap because look, the first day hit it. If this is a reversal candle, then I need this to either displace higher, or if we close, this day closes and has a next day model or reversal candle, then I can trust this to go higher again. But notice how this day creates SMT. So this candle closes and creates SMT. So what will the next day do, right? Distribute lower, right? Manipulation, distribution. And as you see, there's no reversal candle. So obviously this is not going to hold. And we can target down here, right? As per the weekly profile and the previous week's close. So let's confirm it. All right, we have a range high to range low. So previous day distributed. What happens after expansion? Consolidation. Right, so now you have this internal PA to this range, and we take out Asia highs inside of this fair value gap. So I can trust this to be the high of the day. And then price, right? So this is 6 a.m. manipulation. 10 a.m. open high into a 1 hour swing point. We're always going to frame our trades off a 1 hour swing point or higher. And it also has SMT. This is where I am. Hold on. Okay, let's go to the 15-minute chart. So notice the 15-minute chart. We open high, same thing as the 4 hour, the daily. This is the first candle I hit the key level, so I want to see this candles. The next candle is displaced lower, and eventually get that CSD. So let's go look at the lower time frames. Right, so this is the smart money reversal, the swing point being engaged. Right, now we have this protected swing with SMT. Right, this first breakdown and retracement is the low risk sell, and I want to get in. This is my personal, I guess, opinion or whatever. Um, I like to get in on first stage distribution. So, right, like I said, the reaction off of the low risk sell is going to create a range and a PD array. Once we engage with that PD array, which is just a propulsion block, this is an entry right here, and we displace off of that, and we have all these lows, right? And again, we're creating advanced market structure. And once we displace here, right now this is your silver bullet. Right now I'm entering off that. I'm targeting this low. Let's continue. So look what we do. Right now this is very big range. So once you have a big range like this, 2 days like this, huge ass range, you tend to get a, you know, kind of like a consolidation day or you know, a retracement day. You can see this like multiple times. So big range day, right? We kind of fall back to the range. Big range day, kind of have a indecision candle. You know what I'm saying? So with that in mind, we have this SMT. We're displacing through the EQ of this range. So I do not want to buy this day. That's completely against the trend, as you see. So if we're going to displace this range, where's my draw liquidity? Down here, right? So if I'm going to short, right, I want to short. So this looks good, right? We have everything, right? We've taken out, this looks like a London, or sorry, a delayed New York protraction. We have the CSD, but like I said, my style, if I'm going to be entering way down in discount, I want to be more safe. I want to enter on first stage distribution. So I want to see a reaction off of these up close candles, which we don't get, right? We're just displacing back in the range. And when you displace back into the range, so this is viewed as manipulation, I want to see distribution. Distribution does not displace back into the range after taking sell side liquidity. We just make a, you know, just a retracement and we distribute lower. So that's your invalidation. So I don't look to trade this day. As simple as that. So look what we have here, right? This day is an indecision candle, like I said, and we're looking to trade the short. We're only looking for shorts. Did I not add a... Okay, it looks like I didn't add the intermediate time frame perspective, but that's fine. This is just an hourly swing point up here, right? Price retraces. So look what 830 does, right? We create, uh, we kind of create these equal highs and displace lower, and then 930 ends up coming back up here, right? And takes this hourly swing point and forms SMT. So we're taking out data highs and taking out this swing point on the hourly chart at a key time. So we make an open, high, low close. And I wish you could see this. It kind of sucks to add this. But this is the new day opening gap to the left that price is projecting on the hourly time frame. We are failing to displace over that. And so 10 a.m. opens here, right? And we distribute lower. So now you can enter off of this change of state delivery. But again, this is not my type of trading. I want to see a retest of this order block. So I didn't even enter this, but I'm just showing examples, right? Here the first change of state delivery. And this is kind of like a mitigation block, right? If you drag out this fair value gap that got respected, drag that out, price is respecting that. So this could be an entry. And this right here is a swing point on a lower time frame. So you really could enter here, but again, I didn't. So I'm just showing you guys some examples. So that was the weekly close. It's right here. So now I have a swing point off of this key level. So where do I look for price to go? I'm not looking to buy. Why am I not looking to buy? Because yeah, this is a swing point, but remember, I'm not trying to catch a reversal unless the weekly profile aligns itself. So I'm looking to key off this fair value gap. So I'm not looking to trade the first day we hit this. If we start to, respect it later in the week, then I have more data, right? So this is Monday. We're trading lower. So let's see what we get, right? Right, so when we open 10 a.m., my time window, what do we see? We see classic sell day, but this is already a large range. Not interested in this day as we actually hit that weekly fair value gap. So again, the draw liquidity is already hit, large range day. I'm not going to sell when we hit this key level, and I'm also not going to buy because the daily profile is not aligned. Does that make sense? So let's go to the next day. So how did that day close? We actually end up, closing back inside of the range and respecting this. So now I have something to work with, right? The previous day hit a key level, so now I can actually frame a trade back to possibly internal. We have this SMT, so if this candle created the SMT and also hit the key level, then I want to see this candle, close back inside of this range. I want to see displace higher. All right, as you see, the 6 a.m. candle takes out this short-term low and also hits this BPR. So again, manipulation, what I want the next candle to do, either reverse off this candle's low or displace higher. All right, so we have session highs up here. All right, this is your market maker's buy model, right? So what happens, we have 930 hits the key level and displaces higher. So what can I already expect is a 10 a.m. open, low, high close. We have SMT, so it's now protected low. So this is when I will enter off of the low risk buy, is when everything aligns. You see the daily is aligning, the 4 hour already hit the key level. Now I have SMT at the lows, and this got hit at a specific time. So this is where you don't want to see 930 lows being taken. And it got a little bit close, but that's what happens sometimes. And yeah, once we hit this key level, guys, I am done for the day. Like, that's what I also forgot to mention, is when your intermediate time frame perspective it gets hit, then I really don't want to trade unless we, hit another hourly key level. So if we displace here, retrace into an hourly key level, and we have SMT and everything is met, then I'll look for higher prices. But that's rare, honestly. I'm not going to cap. So look at this day. What do we do? CSD. So now I have a swing point. So next day model into this fair value gap. Very simple. All right. So once I come into this day, this session, what do I see? Classic buy day. But notice how we already hit the key level, so I'm not interested. It's literally as simple as that. Here's your original consolidation, your accumulation, smart money reversal, right? And you're buying lows, right? Selling lows as well. Or sorry, buying lows as well. And right here is a 4 hour fair value gap etc. But yeah, like I said, I don't have anything to target, right? So I'm not gonna trade. So I wait for this day to close, right? If this day hit the key level, what do I want to see this day do? Distribute back into the range, right? Even though it's not a reversal candle, we do have quite a bit of a wick, right? We have a longer wick on the top side than the bottom side, so this is actually what we reverse off of. And I'm looking to go from internal range to internal range. This is actually now Wednesday, so if this is Wednesday high of the week, possibly, what do I want to see Thursday and Friday do, right? Displace back into the range. All right, so this is 830 right here. So we have range low to range high, right? This is accumulation, manipulation. Notice the daily profile. Again, didn't hit a key level, just kind of retracing. And then we hit this key level at a key time. And now I'm looking to catch a trade back into the range, right? So at 9:30, we make that run up. We create SMT at that key level and high resistance, displacing to the lows. So this is when, right, you look to open high, low close on the 10 a.m. So it's actually 10 a.m. Sorry, not 9:30. Um, so yeah, if you want to catch the 10 a.m. reversal, right? So what did 6 a.m. do? Right, it hit the key level. So this is 10 a.m. right here. So if 6 a.m. hit the key level, what do I want 10 a.m. to do? Distribute lower, right? And you see this wick right here. This is actually a breaker block, right? Drag that out. You see the retest. So these are possible entries. Again, not my type of style here. I actually want to see price hit this order block or this fair value gap for an entry, but I didn't get that. But I'm just showing the possibilities, right? Oh yeah, so this is the same day. As you see, we displaced lower. And what do we see? This hourly candle on ES hits this series of up close candles, right? The CSD. So if this candle hit the series of, if this candle hit the key level, what do I want the next candle to do? Same logic applies on the daily, on the hourly, on the 4 hour, the 15 minute, everything. I want this candle to distribute. So let's go look at that. So inside of that, what do you call it? That retracement, we have a 15-minute fair value gap. So now I'm framing a 1-minute market maker model. And as you see, we have the original consolidation here with SMT at the smart money reversal. And right, we have a retracement. Right, this is really the low risk sell, but it's kind of ugly. So I'm really just waiting for something clean. Right, so this is what I'm waiting for. Right, the 12 a.m. candle opens. I don't even care that's lunch. Like that shit doesn't really matter to me. Especially because we're in distribution mode. So now I have SMT protected high, intermediate term high. So this is when there's no reason for 12 a.m. to even come up here. So this is your first stage distribution. All right, drag out these fair value gaps on the sell side. See how they overlap with each other with all these P areas? And this is your second stage distribution. All right, so now notice how this second day, so first day hits the key level, we're framing a reversal this day. So that was the distribution. Now what are we doing? Changing the state of delivery, and we're inversing this fair value gap. So now we have uh, a good conviction that this day can be bearish. Well, let's go ahead and look at how that turned out. So we run this short-term high, a session high. So this is not really a profile, but it's double purge. So we take out the low, take out the range high, and we have SMT. So this is when you can frame a double purge. And we have 10 a.m. opening. So 6 a.m. hit the key level. I want 10 a.m. to go lower. But as you see, this is a loss. So we have 10 a.m., right? We change state delivery. And I'm looking for a first stage distribution. So the order block off of the order block, basically. And that's just a loss. So I'm done for the day. If price really wants to distribute lower, it's going to do it right here. There's no reason for price to really go up here. And as you're going to see, if I have it here, right, price is just an indecision candle. Oh, sorry, this is the weekly close. but price came all the way up here, basically. So this is the weekly close. So now we're in a pickle a little bit because we're rejecting this low, this SMT, but we're also rejecting the weekly order block. So let's go to daily. We're going to get more information that way. So what do we see the daily do? Right, so we have a weekly fair value gap, as you see, but this is when this becomes a breakaway gap. Because why? The daily has an order block in the way and a fair value gap. So price is not likely to break this just to go up here, right? So this is when we expect the open high into this fair value gap and low close. So let's see how that turns out. Right, so 10 a.m. opens, right? No SMT, or sorry, this is really the session closing, so it's like 12 p.m. And we're just consolidating. Like there's no key level engaged or nothing. So as well, I'm trying to short this, right? And we're just consolidating between this range. So there's no trades. It's also a Monday, so it makes sense, right? So see how this day closed. So if this day hit the key level, what do we expect this day to do? Distribute, and that's exactly what happens. Right, so I'm framing a reversal off of this swing point inside of this fair value gap. Right, so just framing a reversal from here down to here. What does that look like? So 10 a.m. open, shallow run above the 6 a.m. highs. Right, so what do we get? First chain of state delivery. That's my first entry there. What is this second entry? This is the first stage distribution, and down here would be second stage distribution. Drag out this fair value gap. You see how it got tagged right here and respected? Drag that out. And now you have mitigation area, right? So continuing this day, we can even drop to the 30-minute, right? Because now we see a bullish order block, very clear. So if this candle hit it, we want to trade the next candle. See how fractal this is? So let's drop to the 3-minute chart. Do the chain of state delivery, right? This is the low risk sell. Now these series of up close candles, right, now becomes your first stage distribution, right? And you have this inverse fair value gap. Once that gets closed over, right, we're disrespecting the 50% range, right? This range is now cooked, right? So you can enter here as well. Now this is the same day. This is the 10 a.m. candle. It formed SMT and hit a key level. So what do we want this candle to do? The 1400 candle. Open high into this order block, low close. Now this is a 30-minute candle again. So now this is a propulsion block with SMT. So if this candle created the SMT, hit this key level, what do we want to do? We want to wait for this close and trade this candle. So notice how every single time the second candle reverses, never the first. So this is the swing point high that we're framing the reversal off of, and the second candle, right, distributes lower. This hits the key level, the order block, the chain of state order block. The second candle distribute lower, as well as the third. This candle hits the key level and forms the SMT. The second candle, right? It's really the third, right? You have 1, 2, 3, but I'm referring as the first candle that hits the key level. Am I recording? Okay, cool. So now this is the SMT, basically open, high, low, close of the 4-hour candle, right? This is not art class, but you get the point, right? We have low resistance liquidity, right? And you get the chain of state delivery. So here's my entry off of the order block that formed off of the low risk entry, which is now first stage distribution. And price doesn't even offer a second stage distribution, it just goes straight to the lows. So now this is how this day formed, right? Now we have a swing point. So let's see how this, we're only looking for sells, right? So what does price do, right? If this candle right here formed the SMT, I'm looking, so I should have had it right here, but the 6 a.m. candle formed the SMT. So now I want to look for a reversal off 6 a.m. highs, right? We have Asia lows on here. You see the market maker sell model. And since everything is aligned here, right, and there's SMT these highs, this is when I take the low risk entry as you see. And now this is later on. So now we form a chain of state delivery. So now this is a protected high with SMT. And notice again, right? This is the first candle that hits the key level. What will this next couple candles do? Distribute. So we're just waiting for the close. And now these are my second entries, right? We have SMT on the lower time frames, right? Off of that key level. And again, this is your low risk sell in the order blocks and stuff, or the PD arrays that form off of that low risk entry is now your first stage distribution, right? Now from high to low, this is your second stage distribution. And look at the range low, I have a little consolidation down here. And drag out all of these little fair value gaps, they align perfectly, literally. This is now the next day, right? So this day hit the key level, as you see. So if we're going to continue lower, right, we're gonna drop, but we reverse off this swing low. But you're gonna see something, right? What is price doing, right? Look at the daily profile. Does that really support it? No, not really. We have Asia lows, and I'm not really going to buy this day. Now you could, and you could have caught, you know, some buys, definitely for sure. And you don't really want to see this here, right? This what you call it? If you're gonna be bearish, you really don't want to see this bullish retracement this high up. But note the weekly profile, right? We have Monday, Tuesday, Wednesday, so it's a classic sell week. But we're gonna see what happens. So as you see, 10 a.m. right? We actually don't reverse off this high. We displace higher, and we're going to this key level over here, right? And now look what happens, right? First candle hits this key level, so we're gonna frame an entry off the second candle, and this is simply right external back to internal, and now this is with the daily time frame, right? This reversal is not confirmed yet on the daily time frame because this daily hasn't closed, as you see. So this is still pro trend, and the daily profile supports it. Right, so this is your first chain of state delivery. So this is your low risk sell, right? And the order block that prints off of that, it's the same thing every single time. It is your first stage distribution, which I'm entering on, putting my stop loss up here. And I'm targeting this low, which is the change its the 1 hour fair value gap, right? So external back to internal, basically. That is pro trend to the daily. And now the 1400 candle opens, so the 10 a.m. candle manipulates that high. And look what we're starting to do. We're starting to disrespect bullish PDA. We're starting to displace through lows, respecting up close candles, so bearish order flow. And this is what I try to get in on, is this intermediate term high for the second stage distribution. But I got missed. That's going to happen, right? And you see we actually do deliver, right? And why did we deliver? Look to the left. We have this fair value gap, drag that out in time. We also have a low. So these in combination are like resistance, right? So you can think of it as a breakaway gap because we have this key levels here. This stayed open. And so if I'm going to trade this day, right, what am I going to really target? These lows, right? We're displacing through this on a higher time frame with the weekly chart is going to look a little bit cleaner. So it's going to be a high from low. What are we doing? Bearish order flow through the 50% of the range. So that's when you target this low. So what do we have? All right, 10 a.m. opens, open high into a key level inside of a fair value gap. When the previous day really expands like this, is we're going to kind of get some erratic price action where it's kind of just back and forth consolidation. We see how we take out the low and then the high, so double purge here. And these are my entries. So again, drag out the fair value gaps on the sell side of the curve. When they get displaced through, we're looking for PD array alignments. As you see, this is the lowest sell, basically first break in structure. And again, same thing. I'm entering off of the order block that forms off of that. And it is also in line with this inversion level, right? So I'm entering here, putting my stop loss here, and now price is now forming an intermediate term high inside of this level with an SMT. So once we displace with the fair value gap right there, now this is a protected high, and I'm entering here again, putting my stop loss here. I'm targeting the -2 to 2.5 standard deviation. Now we're getting into some random examples, right? So look what happens here. First candle hits this key level. You can trade this candle and this candle lower back into the range, right? High resistance is now, when you can't displace to a high, what do? We either target the range low or 50%. So even down here, the first candle hits this key level. What do we want to see on this next candle if this is going to be a reversal? Right, displacement back into the range, right? Disrespecting this key level, this inversion, right? And then that's when we target highs, right? And as you see, this fair value gap, you have a swing point inside of a fair value gap. We can't displace over neither. All right, so what do we have, right? Expansion, accumulation, manipulation of a swing point. This candle cannot displace over. So what is this candle, right? Distribution. All right, so now we match that with the daily profile. So accumulation, manipulation, right? Distribution. Now what happens here? I take a partial and I get hit break even basically. All right, this is the daily time frame. Let's see what we have here. So internal, right, to external, right? If we're going to frame a reversal off this high, we wouldn't displace through this high. And let's see the daily profile. So basically this is just internal, right? And then we distribute. So we're just catching the distribution days, right? If we go to 4-hour, this is when the 4-hour is in line with that idea, as well as the daily profile. So this first candle hits this key level. I want to see this candle now form the reversal candle as it does. And now I want to see this candle displace, right? Displace back inside this range and away from the key level. So as you see, we have session highs up here. We're framing a reversal of an hourly low. So again, this candle hits the key level. I want to see the next candle reverse off this candle's low or just straight up distribute back into the range. As well as we chain of state delivery. And it's the same thing, right? This candle hits the chain of state delivery. What do? Reverse off the second candle. Isn't that crazy? So this is original consolidation, accumulation 1, accumulation 2, smart money reversal down here. And I'm entering off the first stage and second stage distribution, right? 2 entries here. All right, so this is just the 4-hour chart. We just have bullish order flow, so bullish days of expansion, right? We can trade those as long as the 4-hour, we're engaging with a 4-hour or a 1-hour and above PD array. In this case, it's a 4-hour, as well as the daily profile supports it. So as you see, this candle hits the key level, right? Discount fair value gap in order block. So I need this next candles to distribute back on the range. So now we form a swing point. I'm basically trading this open, low, high, close. Right, so does the daily profile support it? Yes. London low of the day. You also have a change state delivery. So this key level hits the change state delivery as well as this fair value gap. So what will the next couple of candles do? Distribute. That's what we want to see at least. If it didn't do that, if we started displacing through this low on the lower time frames, then I don't want to trade it. All right, so what do we have? Chain of state delivery. All right, we sweep this short-term low because we kind of displace. So of course this little low in premium is probably not going to hold, as well as it in CSD. So now I'm entering a higher resistance basically. It's a simple trade. All right, so this is also oil. So look at this, the previous candle, what did it do? It's disrespecting the constant encroachment of this wick. The high of the day is being created inside of an hourly or above PD array, which is this volume imbalance. And yeah. Oh, also, rejecting this order block. All right, so does the daily profile support it? Yes. Right, what would this be? New York reversal, right? High resistance at the high of the day, daily profile supporting the idea. You have the changed state of delivery up here. You have the breaker block alignment with the second set of up close candles. So this is your low risk sell, first stage distribution, second stage distribution. All right, let's go to the daily again. What did the previous day do? Hit this order block that formed off of this key level inversion. Um, so, and what else did we do previously? We'll always want to ask ourselves that. So we took out these equal highs over here, right? So first candle hits it, second candle reverses like we want to see, and now we're kind of in distribution mode, right? Disrespecting PD rates to the left on the lower time frame, etc. You see this PD rate to the left being disrespected. So previous week manipulates current week expansion. I forgot to add the weekly chart in here, but yeah. All right, so this is the 1 hour time frame. As you see, we have the new day opening gap here, and we are rejecting highs, displacing through lows, respecting. We have to change state delivery, respecting these uh, down close or up close candles. And again, we have a fair value gap here with a swing point in it, and we hit this key level, right? Can't displace over it. So this is candle 1 with the reversal candle. What I want candle 2 to do to distribute low to this low. All right, so what does that look like? This inversion here, right, is viewed as the low risk sell, right? And the PD rate printed off of that would now be your first stage distribution. So we trade away from that area, create up close candles and a fair value gap. You have the high of the day being printed in London. So what would this be? New York continuation, classic sell day, and very clean stages of distribution. You have the breaker blocks aligning. Yeah. Oops. Oh, okay. So this is the, I guess, a lower time from entry. So you have a fair value gap here. So you can confirm that with the 1 minute for a smaller stop loss size. As you see, it comes into the key level. We have a consolidation at the low. So we create high resistance, displace back inside of the range, creating a BPR and a change of state delivery. And you can just enter off that. Now this day, what does this day do here? Right, takes out. Okay, so this is basically the example I showed earlier, but this is early on in the week, it looks like. So we take out this external high into a key level. So what I want the next candles to do, this confirms the reversal off of the first candle's high. So I want to trade this one lower back into the range. All right, so what does it look like on the hourly time frame? This is the reversal candle, right? Having the change of state delivery. This would be the low risk buy, right, off of that. Now this is first stage distribution on the hourly chart. So this candle hits the key level. What I want the next candles to do, distribute. How do we confirm that? Right, we have London high of the day. And now we're just having a New York continuation. We have a consolidation down here, right? We have the this is the reversal candle basically, and this is the next candle I want to see distribute lower. You simply have an order block off of the BPR, chain of state delivery, low risk sell. So now this becomes your second or first stage distribution. And that is it, everyone. Hopefully that made sense. That was my A to Z market maker model guide. So hopefully enjoy, and I will be back at some point, probably taking a long break, but thanks for supporting. You guys have been amazing, and hopefully this helps, and I'll catch y'all later.